Hi guys, I'm EP. In this video, we are going to see what is the balance sheet of the company. Okay, let's get started. In the previous video, we have seen what is the financial statement of the company, and in that financial statement, there are three things. That is P&L statement, and second one is balance sheet, and the third one is cash flow statement. Okay, already we have seen what is a P&L statement. Now we are here. That is, we are going to try to understand what is a balance sheet of the company. Before we getting into the balance sheet, the main three terms we should know is what is a assets and what is liabilities and what is the shareholders equity. Okay, in a simple terms, if I want to explain what is asset, what is the liability and what is a shareholder equity, means an asset means what and all we own. Okay, and the liabilities is what and all we owe. Okay, the asset is nothing but in the long term it will put money into our pocket. Okay, but the liabilities is in the long term it will take money out of our pocket. In the business term, the asset may be like buildings or property or the equipments they have. It is all come under it all comes under the assets. Okay, in the liability category, what and all will comes like loans, that is bank loan and their bond borrowings. Okay, the money which is borrowed from others, they want to pay back to them. Okay, that are all the liabilities of the company. Okay, the shareholders equity is the investors money as well as the promoters money. Okay, to start a business, what and all money the investors and the promoters has put into the business. Okay, that is the shareholders equity. Okay, and to start a business we have also borrowed money from the bank, that comes under the liability section. To start a business, we may purchase land, equipments and computers, softwares like that all come under the asset category. Now the main goal of the balance sheet is to tally the assets equal to liability. Okay, everyone will start looking at the balance sheet like in the terms of assets equal to liability, but don't do that, you will be confused. First you should remember this formula only, that is shareholders equity is equal to assets minus liabilities. Okay, let me explain. Okay, the shareholders equity, what I am told is the investors and the promoters money. Okay, and the asset is what and all the company has own. Okay, and the liabilities are the obligation to pay back the money to others. Okay, in the simple terms, let us consider a person is running a business. Let's say a restaurant business. Okay, what and all the asset for a business, the equipments he have and the hotel place he has and the building he has. Okay, these are all the assets of the company. Let's say the asset of the company, let's say 10 lakh rupees. Okay, and what are all the liabilities, the company may borrowed from the bank loans and borrowed money from others. Let's say the liabilities may be 5 lakh rupees. If you minus the liabilities from the asset, what is remaining is 5 lakh rupees. Okay, it is the shareholders equity. If we sell all our assets and we pay back our obligation, whatever remaining is the shareholders equity. Now if we come to this formula, the assets equal to liabilities, but the real thing is the asset equal to liabilities plus shareholders equity. Now the equation will fulfill. Okay, but in the business term they will say assets equal to liability. The one thing we should understand before the analysis is assets equal to liabilities plus shareholders equity. Okay, in the liability section itself the shareholders equity will come, that is liabilities plus shareholders equity. Okay, in the balance sheets these are all things will be there, that is assets and liabilities. Okay, in that asset we can divide it into two types, that is current asset and non-current asset. Likewise current liabilities as well as non-current liabilities. Okay, let me explain. That is the P&L statement, the previous video we have seen is has a period, that is from 1st April to 31st March. At that period, how much the company has made a revenue and how much the company has done an expense. Okay, that is called profit and loss. Okay, but in terms of the balance sheet, it is calculated from the starting day of the business, that is first day of the business till the 31st March of the current fiscal year. Okay, if the balance sheet is making for FY 2022 and 2023 till 2023 March 31st, what and all the company assets has and what are all the liabilities the company has, that and all will come under the assets and liability section. Okay, it is the major difference between the P&L statement as well as the balance sheet. That is the P&L statement will be taken for a specific period, but in terms of the balance sheet, from the first day of the starting business till the current fiscal year at which the company is making the balance sheet. Okay, it is the difference between the P&L and balance sheet. Okay, now let us see what is the current asset and non-current assets. Okay, a current asset is nothing but a utilities the company has, but it will use the utilities within the 31st March of the balance sheet has done. Okay, before the balance sheet calculation. Okay, let me explain. If the company has a raw material which will be used by the company within the 31st March. Okay, that is come under the current asset. The non-current asset is, let's say if a company has a building. okay, that is a property at which the company is running, okay, and the company has buy the computer, okay, it and all comes under the non-current asset because the company is going to use these equipments after the 31st March also, so that it is come under non-current assets. The main difference is the current assets should be used within the 31st March, and what and all will provide value for the company for many years, okay, that will come under non-current assets. Okay, in the previous example we have seen about the restaurant business. In the restaurant business, what and all the current assets the company have, that is the fruits, vegetables, and the chicken, mutton, these are all the current assets because they are going to use the asset before the calculation of the 31st March. Within 1 or 2 days they are going to use that asset, okay, but the hotel place and the equipments the company have, the company is going to use them for a long term, that and all will come under the non-current assets, okay. Likewise for the current assets and non-current assets, the current liabilities, what and all the short term payments the company has to done, okay, that and all comes under the current liabilities, and what and all the long term obligation the company have or long term the company wants to pay back to someone, that will come under the non-current liabilities. Okay, in the case of restaurant business, the current liabilities may for the next month EMI or the next month interest the company want to pay back the loan. This and all comes under the current liabilities. The non-current liabilities are if the company has borrowed a 10 lakhs from the bank, that 10 lakhs the company is not going to pay next month, but in the long term the company is going to pay back the 10 lakhs, okay, that will come under the non-current liabilities, okay. Okay, the major difference between the either it is a assets or liabilities, the main difference is the thing which has the current come under the current fiscal year, okay, but the non-current assets or non-current liabilities, the calculations will not come under the current fiscal year because they provide a value in the long term or the obligations we should pay is also in the long term, that will come under the non-current liabilities, okay. As we seen in the previous video of the Infosys example, now also we can see the balance sheet of the Infosys company. Okay, now we are seeing the consolidated balance sheet for the Infosys company. Okay, if we see here in the asset section, the company has the non-current assets as well as current assets. In the non-current assets, what we have seen before is gain which we can get in the long term, okay. If we see here the property, plant, equipments, this likewise the right of use assets, the goodwill, and the financial assets like investments, the company may invested in other companies likewise, okay. The non-current assets are 54,935 crores, okay, and the current assets are cash and cash equivalents, trade receivables called current assets. If you see the current asset is 70,881, okay. If we add the 70,881 plus 54,935, then we can get 1,25,816 crore rupees, okay. That is the total assets of the company, and the many investors will look how much the cash and cash equivalents the company have, okay. We have already seen the total assets equal to 1,25,816 rupees, okay. Now let us see how much liabilities the company have. We have already seen the assets equal to equity plus liability, okay. If we see here the company's total equity is 75,795, okay. Equity share capital and other equities like that, okay. If you want to know exactly what is the equity share capital, you can go to the notes section and you can read it. In the liability section, the total non-current liabilities is 10,835 crores and the current liabilities is 39,186, okay. If we add the total equity plus total non-current liabilities plus total current liabilities, that is 39,186, we can get the value of 1,25,816 crores, okay. Now we tallied the assets equal to liabilities, okay. If you want to know exactly what are the non-current liabilities and what are the current liabilities, you can check the notes as well. This is how the balance sheet of the every company will look like, and for every individual persons also we can make the balance sheets. Now let us see a quick recap what all we have seen in the balance sheet. The first one is what is asset, the things which will provide value to us, and what is liabilities, that is the obligations we to pay, and we have seen what is the shareholders equity, that is the investment amount of the promoters as well as the shareholders, okay. And the main thing we should consider is the shareholders equity also comes under the liability section, okay, don't confuse it. If you see a company as a person, in that perspective the shareholders equity will come under the liabilities only, okay. In the next video we can see about the cash flow statement. Till then, stay tuned. Thank you for watching.